In case you missed yesterday's stock rout the first time that we showed you, let us rewind the nightmare. The Dow plummeting 600-plus points during this hour yesterday. The S&P lost 2%. The Nasdaq down nearly 3%. Anyone who thought the end of midterm elections meant the end of volatility was clearly wrong. But let's take you live to the Wall Street Journal Tech D Live conference in Laguna Beach, where Susan Lee is standing by with someone who has absolutely no problem dealing with market volatility. New York Stock Exchange Group President Stacey Cunningham. Take it away, ladies.
All right, Liz. So, Stacey, great to see you here at a tech conference on a day where markets are just moving up and down. I think we're down a few hundred points coming off that 600-point loss yesterday. And talking to investors, and yes, we're at a technology conference, but they say tech is the reason why we're seeing such big volatility. It's the algorithms at play.
I think it's less about algorithms and more just market reaction to news and uncertainty out there. We've been in an uncharacteristically long, extended period of low volatility, and now we're just seeing the markets to actually behave a little more normally, as compared to the way they used to. And the markets react to news, and that's what's happening right now.
Yeah. So when average folks and folks even here at the event come up to you and say, "What's going on with the markets?" What do you say?
I say that they're acting the way they typically would act. I think when you look at 2017, and there was a really quiet, understated reaction from the market on any time there was news out, whether it was global news or any kind of market conditions that typically would lead to a market reaction. We weren't seeing that. And so now we're actually seeing investors absorb news, and the markets react much more quickly because they are using technology to react. And so you see reactions happen, and you see them go up and down. And, I think it's really important just to make sure that they're operating smoothly, because preserving investor confidence through that is so critical.
I thought Liz was going to ask a question, but I'll just sneak another one in there. Liz, are you there? Do you want me to fire another one at Stacey?
I am right here. And Stacey, I think that investors are very thirsty, at least for one thing, and that's more new listings, more IPOs. How do you get the edge, especially when I know that some of the biggest startups are right there at that conference, including the CEO of Uber, Dara Khosrowshahi, and he's there. A lot of other hot startups are there. There's a steel cage death match that always goes on between you and the NASDAQ to nab these listings. How do you plan to get the edge, and will you be hitting up some of these startups there?
I think taking a step back, the most important thing is we focus on making sure that companies out there realize and see the benefits of the public markets, because it's not just between the New York Stock Exchange and NASDAQ. There's also a lot of private capital that's available out in the world, and that's why you're seeing many of these unicorns wait to come to the public markets until much later in their public, their company life cycle. So it's important that they see that the benefits the public markets deliver, that unparalleled liquidity that's out there, the visibility and brand they can leverage to attract customers and investors is so critical. And so, one, we want to make sure they see that and keep that in balance. And then we'll get down to the market differentiators between the public exchanges.
One of the things that they do shy away from is quarterly guidance, because sometimes it's very hard to have that kind of visibility. Where do you stand on that? You have Warren Buffett and Jamie Dimon saying, get rid of the quarterly guidance that's required of so many companies.
I think there are two different contributing factors to the talk about quarterly earnings reporting. One of them is just the work that goes into producing those documents. And is there a way that we can streamline some of that down so that companies can have a more efficient way to communicate with our investors and still carry the same amount of investor protection, but just limit some of the work that goes with that? The second part is adjusting the investor view of a short-term outlook for a company versus a long-term outlook. And we want to make sure that investor protections are coupled appropriately with giving companies the flexibility to lead their companies for the long term and not just the quarterly results. So that's something that we engage very frequently with our issuers on, as well as with the regulators, and seeing if there's a way we can strike that right balance.
Okay. Well, Stacey, it's great to see you here at the Wall Street Journal D Live event. I know you're heading to San Francisco, so more tech talk, I'm sure.
We should do all of our interviews here.
I know. It's really great. Anyway, it's great to see you. Liz, we wish you were here. Back to you.
Yeah, my home state. Listen, you guys have the best of it right now. It's a tough time for California. Susan, Stacey, thank you very much.